Hey guys, welcome to Taofi, where we talk macro, trading, and then finance. Today we're actually going to be covering a pretty big topic. It's going to be the psychology of trading and investing. I don't know if I'm going to be able to cover, all the topics in this short video, but it's a field where I'm always learning, and it's not just applicable to trading and investing. It's really applicable to a lot of life. So I hope you guys enjoyed this one. What we're going to talk about is, the basic trading. I'll have a link actually below to trading podcast. It's one of my favorites. I've actually learned a lot of psychologies, and some of the topics that they cover I don't cover down here, so look out for the link below if you are interested in learning more about trading psychology. So some of you guys know I just finished the book Market Wizards, and one of the chapters covers all entirely just psychology. I'm actually just starting to read Alpha Trader by Brent Donnelly as well too, and I think probably a third, if not 2/3 of his book covers psychology. So that just kind of gives you an idea of just how important psychology is in trading and a lot of aspects in life. For today, we'll talk about, what a losing mindset looks like, what a winning mindset looks like, some of the common issues that traders and investors run into, and then we'll talk about some of the solutions and things that you and I can do about that. And then the last thing we'll probably talk about is confidence. And confidence is really important in trading, and it kind of lets you and sets the stage for how well you're going to do in the trading market. So I hope you guys enjoyed this little presentation. So let's dive in. So with trading psychology, I think it's super important. People used to laugh at those kids who used to study, psychology as a major. And honestly, now that I'm learning more about, flow states and just how your mind works and creativity, I think understanding psychology is super important. Not just in trading, but in every aspect of your life. And if you can apply these psychology mindsets and philosophies that we learn to other parts of your life, I think it'll actually benefit as well too. So let's dive in. The first, get some credentials about, that section. So the section in Market Wizards about psychology is from Dr. Van K. Tharp. He basically got a PhD from the University of Oklahoma. And if you guys have ever done a field sobriety test on the side of the road, you can thank this guy because he helped, standardize some of that as well too. So it just kind of gives you a framework of what he does. He likes to kind of standardize and look into the mindset of people. What he does is he does full-time counseling for traders. He likes to take a look at how stress affects the body and how it affects your psychology and your state of mind when you're trading. His investment psychology inventory test is what he measures, basically winning and losing traits. And we'll cover a lot of those traits in this presentation. And then his strongest interest is actually in psychology and winning, especially in the markets. And how his basic theories, he puts this all together and tries to kind of put it in a framework for folks to what he calls super traders. And so if you kind of help combine some of these philosophies, some of these traits, some of the pitfalls, and then we also cover some of the solutions around it, and then hopefully this will help you and I become better super traders. So that's a little bit about Dr. Tharp. So let's kind of continue on. So the losing mindset is really important. I wanted to kind of cover this first. So basically, Dr. Tharp looked at, what's a composite and what's in the mind of people who are constantly losing in trading and investing. So a couple of things he highlighted was these people were highly stressed. So when you're trading, it's already a stressful activity. And when you're coming into trading and you're highly stressed, it makes, it impacts your performance and impacts how well you do in your results. Along the same lines with little protection with stress is they have little protection with stress and basically stress management. So I think a really important thing is to understand some of your key stressors and then look at how you can eliminate those in your trading process, whether it's the news or events or different time frames. Figure out, what are those things that cause you stress during trading and investing, and try to limit those as much as possible. Another thing Dr. Tharp goes into is that a lot of these losing traders and investors really have a negative outlook on life and expect the worst. It's, and I've heard this a couple of times, a lot of folks who are optimists do much better in the market. It's also very true for entrepreneurs as well too. So entrepreneurs who are optimists, they have a really positive outlook on life and they're always problem solvers. They tend to do the best in business, and the same concept kind of applies to trading and investing. You have to have a really optimistic mindset And you really want to kind of figure out, there are good things, and that, just because you're losing, it's not the worst thing in the world. Next thing he kind of covers is that losing traders have a lot of conflict with his or her personality. So we'll go into a little bit more detail of conflict, but he basically says that they bring in some kind of conflict outside of life, whether it's family, friends, significant others, or outside of trading. They bring in those conflicts from their life and their personal experience back into trading, and that can negatively impact their performance. Another thing with a losing mindset is that a lot of these losing traders blame, everybody else for when things go wrong. So when they don't hit or they hit a stop loss, or the market goes down, or something happens that is not something they're expecting, they basically blame others, and they don't look at, hey, what happened with my process? What are the things that I could have prevented this from happening? And so we'll touch on this a little bit more of solutions, but basically, the market's going to do its own thing, and you can't blame the market, and you can't blame the person who gave you the trade or the investment idea. It's, did you have the right process, and did you vet this idea out properly, is what I think is probably more important. Another thing of a losing mindset is their crowd followers. To that point originally we just talked about, you really don't want to be a crowd follower. There's a difference between being a crowd follower and being a trend follower. I think being a trend follower, you're looking at trends, and you're looking at data, and you're looking at reasons, and you have data to back up why this trend is in its current way. I think that's much different than a crowd follower. A crowd follower, I think, is somebody who, and I think of FOMO, I think is the biggest thing, is that they hear a trade or an investment idea and they jump on board without any kind of process behind it. I think FOMO and this crowd following mentality affects a lot of people, and myself included. When I first started trading, I would hear about a trade and then instantly trade on it, and then not have any idea why I did it. Next thing is they're disorganized and impatient. I've been in the same way as well too, not just in trading, but in life. I've come to organize my trades, organize my trade ideas, idea generation, and then how to execute, and then how to take profits as well, and making it a little bit more organized. And then with the impatient piece, I think a lot of folks just want results right away. And that goes into our last point, is that they want actions and they want results now. I've been trading, and investing for a little bit over 7 years now, and I've learned a lot. And I've seen the most improvement over the last 2 years or so when I've taken things a lot more seriously. I started journaling and just been a little bit more patient with how I've conducted my process and how I trade and invest. So those are a couple of things of a losing mindset. And next we'll take a look at what's the inverse of that. So what does a person with a winning mentality have? So how Dr. Tharp kind of dives out and separates a winning mindset is, the first thing he kind of goes into is just mindset. So the first thing about really, efficient traders and investors, they have a really well-rounded personal life. And that kind of is important, not just for trading, but just even if you're working. If you have things that are going on in your life and you're just kind of really just focused on trading, and you don't have any outlets or hobbies or any form of exercise, it kind of really does impact you. You have to take care of yourself, you have to take care of your health, and you have to take care of things outside of trading for things to go well. Another thing he goes into is that they lack confidence, and then they don't take responsibility for the results. This kind of goes back to blaming others, and they just have different ways of dealing with that. And I think that, and a really important point that he mentions, is that making money was not a really significant motivator for and correlated to success at all. So we always think trading, investing, yeah, there's a lot of money and there's finance involved in it, but in his research and some of the things that he goes into, making money really isn't that important. And the mindset, your psychology, your emotions, and everything actually play a much larger role. He also goes into winning mindset. They're really high in this, what he calls the decision-making area. They really have solid technical factors, and they know, how the market moves, how price action moves. And then they make a lot of sound decisions, and it's based off of data and not off of their own kind of biases or anything else like that. And then back to the crowd following piece, it's a lot of these traders and people who win a lot in the markets, they can think independently from themselves. It doesn't mean that you have to come up with your ideas or your own trade ideas all the time. It just means that, yes, I personally can hear trade ideas from other people, but I go through my trading process to kind of investigate and just to make sure that what they're saying actually pans out. And that's kind of slowing down, thinking independently, and not just taking somebody's word for a trade or for an investment. Then the last piece is what he calls management discipline factors. So risk control and the ability to be patient is really super critical. And then he also kind of puts intuition into this category as well too, but intuition is probably not as critical as a factor as some of the other ones that we just mentioned above. So as you can see, those are basically the inverse of a losing mindset, and those are kind of the things that, so you have to have a well-rounded personality. You have to really have a really good decision process, and then you also have to really have management of your discipline, your emotions, and kind of working with your intuition. So another really kind of quote that he talks about, and it really resonates with me, is that too many people get stuck into the beliefs they were told, and they continue to cling onto those old beliefs. In contrast, mine are constantly evolving, as in a trader's beliefs and what the things they follow should always be changing. And that's very true. We talk about the analogy of surfing and how trading and investing, the environment changes. What was working, a month ago for me in the beginning of the year or last year doesn't work again this year. And so you have to kind of see what the market looks like and things that are working, and kind of adjust and make changes to those. I actually just saw a really good video on Raul Paul and Peter Schiff, and Raul's I wouldn't say a Bitcoin maxi, but he is a firm believer in crypto. And then Peter's on the opposite end of that, where he believes that gold is the solution to everything. And so my belief is that I think there's a place for gold, and I think there's a place for Bitcoin. But I think now a lot of the folks who are, what they call gold bugs, or people who are obsessed with gold and think gold is the solution to everything, that actually might change. And I think a lot of that has actually been flowing into Bitcoin, and some of the funds and some of the allocation that people used to put into gold, I think that's slowly moving over into Bitcoin and crypto and some of the new stuff. I see this a lot as well too. We also see it with AI, where a lot of folks, are kind of stuck in their own ways, and they don't want to adjust, and they don't want to kind of see and open their eyes to what's going on now in the world, and that the world a year ago is not the world today. It's really important as an investor and as a trader. You got to have your mind open to things. Don't get too stuck on your old biases and your old beliefs. Always look at the world as a blank slate, and then make adjustments and change things as you get more and more data. The next really important quote that I was able to pull out of that book, and it's not just been in this book, I've heard it through other interviews and other conversations with other traders, and time horizon. And so Dr. Tharp says, "I'm convinced that it's difficult to make money day trading or trading in a short time frame. So I'm skeptical about anyone who wants me to help them day trade successfully." So as some of you guys know, if you've been following me, I trade on the daily chart. I do use the hourly chart for timing, and then I use the weekly chart to see where I'm going. I'm not saying that you can't, day trade and can't make money day trading. There's definitely day traders, and there's definitely people who can make day trading a career and make it consistently profitable. I don't have that skill set, nor personally do I want that skill set. I like the daily time horizon just because I'm able to, step away from my desk, and it's just a little bit easier managing the positions and investments and everything else with, everything that's going on in life. I think if, trading is your only thing and you're a world-class trader, and maybe you can slowly evolve to being a day trader, but I don't know if I would, ever advise anybody to start out day trading. This actually happened to me when, I made my first, $25,000 on Robinhood, and I was classified as, a day trader. And you know what? The day after that and the week after that, I actually lost a lot of money, because now I thought I could day trade and then, get in and out of positions in the same day. And that actually taught me a lot of lessons, and I actually lost a lot of money day trading. And even nowadays, I hear about stuff, and I try to trade things on a shorter time frame than what I am looking at the daily. And it just hasn't been working. So I'm going to kind of continue with the daily time frame. And then it's just really challenging. And I agree, it's going to be very challenging for those who want to trade on the shorter time frame. Not 100% doable, but to do it consistently, I think is a whole different story. So I think as you think about this, think about your time horizon, maybe start off on the daily chart, or maybe even the weekly chart. Start off slow, get your skill set in place, get your process in place, and then, get down to those higher frequencies. And then kind of close this out. I think a lot of my trades that are on the 1 month, 2 month, 3 month, 6 month, even year horizons have actually been less work, and they've actually returned a lot less if you think about like the management time versus the return. So Just a couple of things for you guys to think about specifically with time horizon. So here we'll talk about a couple more of what Dr. Tharp says is the common issue for traders. And number one is just risk. The basic thing that we hear a lot is cutting your losses and then letting your profits run. And when I first started doing this, I would, never cut my losses and didn't even have stop losses in place. So I think this is super important. I think if you even follow these two rules, you can definitely get ahead of a lot of other traders. Why it's important to cut your losses? Because you don't basically want to blow up your account and you want to have risk management. Risk management is super important. And then letting your profits run, it's like you don't want to take profits too early and you want to have kind of a game plan when you first enter the trade. So where are you going to take profits? And then make sure that you follow your process with that. Number two is just dealing with stress. He says the second major problem people is having with dealing with stress, it takes two forms, worrying and kind of the flight or flight response. And we'll talk a little bit more about the next piece, which is flight or flight. So the first aspect of flight or flight is that it causes people to really narrow down their focus. And then when they're under stress, they really don't want to decide. I've done that myself, and when I have like multiple losing trades or I'm really worried, I get really super hyper focused on those losing trades and I start not to follow my process and the process kind of breaks down from there. So what you want to do is kind of avoid that flight or flight response. And we'll talk about some of the solutions to how to control our emotions and not be in that flight or flight response. And when we're in that state, we're basically just being emotional, and it's really important. I think the second factor for fight or flight is that people tend to expend more energy. So during that, fight or flight, when you're fighting, you're spending a lot of time on, and specifically his case, he goes into kind of the losers. You spend a lot of your time and your energies on your losing trades, and you don't take a look and you don't cut those losses. As soon as you cut that loss, those losing trades are out of your mind and you kind of free up more cognitive brain power to really focus on some of the trades. So, on the fight or flight, it's just really don't get too hyper focused on one idea or one trade, and then just try to not to spend too much energy and time and your brain power on those losing trades. And number four is really a conflict. So the fourth major problem is dealing with some kind of conflict. So Dr. Tharp goes into different examples from that. So it's really kind of protecting. One is to make money, and that's conflicting with their process. Another one is kind of protecting the trader, him or herself, from losing and failing. Another part is just to make them feel good. Sometimes trading is makes people feel good and they like winning. And then maybe the last part, and maybe a lot of people and myself even resonate to this, is like you want to take care of your family and the well-being of your family. So those are some of the conflicts that you have that can happen during trading. It's basically, you should be sticking with your process. And a lot of people, that's why they say you should only invest and trade in money that you're not going to be needing this for rent or for food or for anything like that. It basically, now there's a conflict and now there's an added factor and more stress involved in this, because this is money that you actually need for your life. And so I think that's why that advice is so important for people, and that you got to think about this conflict. And you're trading because you enjoy trading, or you're trying to increase your performance and your returns, not because you want to take care of your family, or you enjoy winning and you want to protect yourself. So think about those, a couple of other. And then the last major thing, and a major common problem, is just a lot of folks have difficult time making decisions, and that they bring just their normal decision process into trading markets. So one example in the book is they go through the process of decision making for buying a car. So when you first buy a car, you have to take a look at all the makes and models. You have to take a look at the color. You have to take a look at all the accessories. You have to take a look at what dealership that you want to go to. All that decision process making takes a lot of brain power that's taking you away from researching or looking at your trade or following your process. So what we want to do, and we'll talk about a little more about in the solutions, is that you basically want to make decision process or eliminate too many decision points, and we want to kind of streamline our process and basically just make it easier for us to make a decision. And so that's why signals, indicators, and technical analysis is so important, just because it takes the emotion out of everything, and it just kind of gives you a signal of when to put on a trade and when to take off the trade as well too. So those are the major problems and the common issues that a lot of people have dealing with psychology of trading and investing. Next, we'll talk about some of the solutions. So how to deal with stress. Dealing with stress, a lot of people need to figure out what causes them stress and then how to protect against that. If we mentioned if it's news or events or different time frames that is not aligning with what you are as a trader, then you got to figure out what those stress factors are and then manage that. They also go into, maybe taking a stress management program, and then also kind of understanding and why you kind of are stressed out about the event. So maybe next advice for you guys is next time if you're trading and investing and you're feeling stressed out, that's why writing it down, hey, I'm feeling stressed out for this X, Y, and Z reason. And maybe there's a pattern somewhere in there as well too. And the next point of stress is that people think losing is stressful. And as you cut your losers, quickly you find out that it's okay to lose, and that, the really good people, the professional folks who are making millions, if not billions of dollars, actually get it right about like 60% of the time. So that's where risk to reward ratio is really important. And then I don't really deal with losing and try to make it. And it's not as stressful anymore. When I first started, losing money was super stressful, but now losing money, it's just a part of the process for me. And so I don't get too stressed out about that. And the last point is that our culture is like only taught that win is acceptable and you can't lose, and that losses, make you not successful, but that's actually completely not true at all. A lot of entrepreneurs, a lot of business owners, a lot of folks who are just doing things for the very first time actually fail lots, and they're not doing great at the very beginning, and that's okay. And I think that's kind of inversely correlated with how our society looks at winning and losing. So those are some of the things that you can do for stress management. Some things you can do for decision making is to adopt a trading system that gives you signals to act. And I think that's where technical analysis is very important. Technical analysis will give you entry points, exit points, and then it helped me basically sleep a lot better at night. And then it helped me enter and exit positions much more fast. I used to be just a fundamental trader, and I would dig into the financials and figure out, how is this company doing? And, is this company making a good product? And so I'm less worried about that. Sure, it's important to me nowadays, but I'm less worried about that, and really more important on the technical systems. And then a really cool concept that Dr. Tharp brought on was this anchoring. So anchoring in psychology refers to cognitive biases that describes common human tendencies to rely heavily on the first piece of information that's offered. And then adjusting and moving away from that anchor is much harder, and you spend a lot more energy doing that. I think that it could be a pro or a con. When you talk about anchoring with technical analysis, I think is actually a very positive thing. As I mentioned before, the first thing when somebody gives me a trade idea, or I think of a trade idea, or I see something, I look into my charts, and that's the first thing I do, and that's my anchoring. Looking at a chart will give you basic information and gives you kind of the trend and takes the emotion out of it. And it's just price action. It's just price data for you. And then another point is, like we mentioned, and I've mentioned before, is just use technical analysis. I use DeMark, and if you guys are interested in what DeMark is and how to follow me, sign on to our macro daily report where we kind of just do trades, and we have a Robinhood account as well too that looks into that. And I kind of show you guys how I use technical analysis. But technical analysis is my go-to. I will not trade anything without looking at a chart. And I think a lot of folks do poorly just because they don't take a look at the charts. Some other things that I've learned from other traders is that just keeping your screen and the screens and your menus, and I have my macro dashboard in the same screen in the same location. And I look at it every single day. So that kind of takes away the decision process for me. I look at it every day and I know where it is, and I don't have to think and shift my brain. And that takes a lot of brain power to figure out, hey, what screen was this on? Then the last thing is just have a routine. If you have a routine, so I wake up, I look at a couple of charts, I look at my macro dashboard. And you guys have seen that macro dashboard, and I go into the news and I go into some of the traders that I follow, and that's just kind of my process. It's really the decisions has already been made for me. So when I wake up, I'm not thinking about like, what should I do next? And hopefully that will help you guys with the decision making process and help alleviate that as well. And the last thing, how to deal with, a negative mindset or some of your emotions. What you can do is kind of control your emotional state. Easy way of people doing that is just kind of controlling your posture, breathing, and muscle tension. A lot of people I know now have Apple Watches. So maybe take a look at your Apple Watch, take a look at that and see, is my heartbeat elevated right now? And if it is elevated, you're probably not in your normal natural state, and that you're in a state that's either your mindset or your emotions aren't there. So take a look at that, take a look at tools What Dr. Tharp says is get out of the chair, walk away, and then imagine yourself in that chair, in that position, and what were you thinking in that time. And then that kind of gives you a break from the desk and from your screens, just to kind of look at things objectively and to see how you are behaving in that state as well too. And then you can kind of change those factors, and then you can change your emotional states. Exercise is a big part of it nowadays. If I'm not feeling great, or like I know that I'm like not 100% emotionally there, and I'm kind of going crazy with like trade ideas or negative thoughts, basically just go for a quick like 5-10 minute run. You can go outside, go for a walk, just kind of remove yourself from that state. And I think that kind of helps you get back into an emotional state where you can actually trade and invest on a much better, focus, and you have a lot more things going for you, and you're going to definitely follow your process rather than when you're in an emotional state. So those are some of the solutions and some of the things that you can do about some of the issues. And then next we'll talk about, sometimes trading is just not for everybody, or investing is not for everybody. So this section we call people that we can't be helped. And so some of those people are people who lack commitment. So if you're not interested in trading and you're not committed to investing, then it might not be for you, and that's okay. There's other things that you can do, and other hobbies and other ways to kind of invest. I've personally found that trading and investing has been the most useful skill that I've ever learned. I've been able to help myself. I've been able to help my friends and family, and I've been able to kind of see and feel like I have a crystal ball of like kind of what's going on with the world now with finances. And I'll do a video on that soon of like, how trading has impacted and changed my life. But sometimes it's not for everybody. And if you're not committed to trading and investing, then I think you really do need to evaluate that. The second thing is that the people who can't be helped are people who have problems outside of trading. So if you're kind of like dealing with health issues, or dealing with mental issues, or dealing with family issues or spouse issues, a lot of those things you can't be helped. You got to first figure out some of those issues first, and some of those problems in your life, before you start diving into trading and investing, because it's going to reflect in your work and your performance there as well too. And the last thing that he mentioned, which I thought was pretty funny, was that the most difficult type is kind of the compulsive gambler. So these people are typically looking for, that high when they're trading the markets, and it actually doesn't help people who are gamblers. A lot of people have the negative connotation that trading and investing is gambling. It's really not. It's the odds, and you try to stack the odds with you. Of course, there's always the house, and the market always has an edge, and it's always geared towards them, but you can, help stack the odds in your favor. And it's much different than just strictly gambling. So those are some of the things you should think about. And again, trading and investing is not for everybody. So just think about some of those things and some of these things we mentioned, and really assess if trading is really for you. And the last thing I really want to talk about is confidence. So confidence is really important to everything that you do. And so some of these things will help you with your confidence in the market. So the first thing you can do is just study markets. Now, a lot of the top traders start their career and they study the markets very well. I'm starting to do that. Not even studying the markets, but I'm studying other traders, reading books, and then just diving deeper into trading. My goal is I want to be the very best trader and investor I can be. And that's a lot of where my focus is, and a lot of why I do this channel and why I trade and invest. It's because I'm really trying to study the markets. It also says they develop models, and whether it be back testing, and I don't know how to do that yet, and that's the next thing I probably want to do, is learn how to back test. They build models, and then they mentally rehearse what they want to do. So every single day, that's why I rehearse. I try to do this, and part of making some of these videos is to help you guys, but also help myself with this process, and to make myself be a better trader and investor. The next thing that they do is confidence comes from just testing these models. And testing this model is just, some people do paper trading. I don't think paper trading is particularly that helpful, since there's not real money on there. And when I first switched over to trading and investing with real money, it's a huge game changer. And the emotional and the psychology side of things, like as we discussed throughout this video, is turned up to a whole nother level. And so start trading and start putting money out there. You don't have to go crazy. Start off with a small amount, but just understand that starting with a small amount is much more difficult. And so start with these models, start testing some of these things, start playing around with charts, and then just kind of test some of these models in your process and figure out what works for you. And the last thing is just commitment. The more committed you are, the more confident you are. A lot of people And I've actually gotten a lot more confident with my process now that I'm like fully committed. When I first started 7 years ago, I wasn't really trading every single day and looking at markets and analyzing everything like the way that I do now. Now, even if I didn't need to trade, I would still do it. And just because I love the way the markets work and I love kind of working and figuring out this, this puzzle, what we call macro and what we call trading and investing. So it's been super fun for me. And I've even become more and more committed to becoming a trader and becoming a better investor. And then a lot of people think they want to be traders or want to be investors, and they're really just not committed. So last thing I want to kind of leave you guys with is just kind of think about it. Do you guys want to be traders? Are you going to be committed? Are you going to, are you going to work through the ups and downs and kind of work through this? And if you guys are, can follow me and we'll kind of go through this journey together, because I think confidence is always going to be something you're always working on. I'm always going to be working on. So that's a lot of the stuff that we're going to be kind of going through on this journey together with. So that's it, guys. Thank you for watching. Thank you for spending some time with me. I hope you guys enjoyed this kind of deep dive into psychology. Again, I'll link below of the podcast, the trading psychology. It helped me out a lot and covered a lot of things like revenge trading and then how to deal with winners, what to do when you're on a streak. So they cover a lot more. I just want to kind of start with you guys off with the basics and some of the things that I've learned from Market Wizards, and look out for the summary of the whole entire book. So thank you again for your time. I'll talk to you guys next time, and I hope you guys enjoyed the video.